Hello, this is Caroline Bell from Summerhill Financial Services with another update for you. Well, the volatility continues through September in relation to investment markets, and we're finding that markets can be up and down up to 1 to even 2% on some days each day. As we speak today, the market's up 1.3% on previous days. For those of you who know, I attend quarterly investment committee meetings in Sydney, where I engage an independent research consultant with a couple of other advisors that I know of in Sydney, and we sit down every quarter and sort of talk about investment markets and valuations. And by any definition, the current market, particularly on the Australian side, is considered to be cheap. Banks alone are yielding 6.2%, plus franking credits worth about 2.7%, so it's nearly a 9% yield pre-tax, compared to what you can get into the bank around 2 to 3% if you're lucky at the moment. So even from an income point of view, Australian shares are relatively cheap. That also applies to European and Asian shares, not so much on the US side, which are sort of more fully priced, or at least fairly priced, as opposed to the cheap status that we're seeing in Australia, Asia and Europe. Like you, look, the volatility can be really tiring and it can be quite frustrating. But for many of you, you're a purchaser or a buyer of investments, such as myself, with money going into my superannuation fund. So as frustrating as the low levels or the low market valuations are, it's actually nice also to be buying shares at these prices. And for those of you that can remember the worst of the GFC, when you were still purchasing investments during those low prices, there was a definite payout with the rebound, which we will see at some point in time. On another note, I was invited to be on a board yesterday to talk about a socially responsible investment. Many of you have actually indicated a desire to sort of have a bit more of a socially responsible bias to your investment portfolio, and up until now I haven't been able to sort of offer very much without looking at funds that either have high fees or sort of relatively lower returns. So was invited to be on the board yesterday to give my input in relation to what I would expect from a socially responsible investment fund, and hoping to have that, if not by Christmas, up and running, then hopefully by January. Essentially, it's looking at sort of three areas, in terms of what they call the ESG, environmental, social, and governance. All of your investment funds have a governance element to them already, on the basis that I truly believe that good corporate governance results in higher profits, but also looking at overlaying that with sort of social elements as well as environmental elements. So more information will come out about that over the next couple of months as we get closer to being able to launch this investment. And lastly, finding that video conferencing is becoming more and more of a preferred option for a lot of people in relation to having planning meetings. Maybe not necessarily every single meeting, but certainly every 6 months for those people that I sort of see every 6 months. And finding it even becoming more popular for people based in Melbourne, where they can't be bothered dealing with traffic and what have you. So given Skype could be a little bit fraught sometimes with dropping in and out, looking at GoToMeeting. So when you next book your planning meeting online, instead of seeing Skype, you'll actually see an option for GoToMeeting, whereby you can sort of link in through the link on the online scheduler, and any video conferencing will be done through GoToMeeting, which, based on our testing so far, seems to be much more reliable than Skype. If anyone still wants to use Skype, of course that's an option, but hopefully the GoToMeeting just is a little bit more user-friendly and easier with the screen sharing as well compared to Skype. As always, if you have any questions or feedback, please let me know. And until next month, I'll speak to you then. Bye-bye.